Reuters Today coming up, living the London high life, the view from Western Europe's tallest building, and the loopy signature likely to end up on America's dollar bills. We start, though, with news of the yen sliding to 2.5-year lows. The move comes as Japanese Prime Minister Shinzo Abe gives the green light to one of the biggest stimulus packages in history.
With this stimulus, we intend to push up the GDP to 2% and create around 600,000 jobs.
In an interview with the Nikkei newspaper, Abe put renewed pressure on the yen by saying the Bank of Japan should consider a dual mandate of price stability and maximising employment. Let's talk with IG's Brenda Kelly. Morning to you, Brenda. On the inflation target, how are they going to get to 1%, let alone 2%, do you think?
Well, it's going to be an uphill battle, that's for certain. It does seem to me that a lot of the actual yen weakness at the moment has been down to the rhetoric coming out of Japan rather than any real sort of actions at the moment. And of course you saw their deficit slip back in November, and of course their current account also slipping below the line as well. So that's adding to the yen weakness. You're also getting the scenario where there's a little bit of a risk-on sort of situation in the markets. So that is feeding into the weaker dollar. So in some ways the US policy is helping the Japanese yen to a certain degree, but getting to a 2% inflation target is going to be a difficult and a longer term rather than a 1 year sort of scenario, given that it's a lagging indicator and given that we're in a little bit of a problem in terms of like global economics to get to that particular level. But I do think it's possible to get to at least one, given that there's a certain better interest in the Japanese stock market at the moment.
All right, let's get over to Euro. Italian debt auction today. Don't seem to be great concerns here. Will we see the yield on the 3-year paper dip below 2%, do you think?
I think it's quite possible. Italy had a bit of a shocker there last time round where in terms of the political arena, and I think for the time being it's a pretty good bet given that it's above like 2.2% above the French equivalent bond. So I think we'll see a nice yield on that today, a good bit of interest too. The main thing that's problematic for Italy is the election going forward. It does look like that it will go ahead and it will be still on kind of Monti sort of reforms going into place, but there's still that sort of uncertainty that Berlusconi could pip the pace in the polls.
All right, and I just want to finish up with this sort of classic beginning of the year optimism we're seeing. I mean, equity markets in particular, will we get to 6,100 on the FTSE? Is the optimism overdone?
I think the optimism is exceptionally exuberant at the moment, and it comes in the back as well of the unanimous vote in the ECB yesterday on the rate there. We saw a similar sort of unanimous vote in July 2011, just before the crash. So this exuberance we're also seeing the AAII at February high levels, and of course that 6,100 has been such a resistance level. I'd like to see a weekly close above that, preferably above the 6,120. Otherwise, I think we're in for quite a significant reversal given the move upwards we've seen in recent days.
All right, thanks a lot, Brenda.
Thanks.
Other news, a deadly day in Pakistan, more than 100 killed in 4 separate bomb attacks around the country. Syria, covered in snow, an unusual bout of cold weather causes suffering to those caught up in the fighting there. And after meeting pro-gun groups, US Vice President Joe Biden says his task force to reduce gun violence will make recommendations to the president by next Tuesday. In China, inflation fears raising their head once again after food prices drive CPI to a 7-month high. Let's get to Tara Joseph in Hong Kong. We're still well below the government target. How significant is this, Tara?
Well, do you want me to start with the good news or the bad news, Axel?
Well, we've had such a lot of good news out of China recently. Why don't you start with the bad?
Okay, well, the worrying factor of this latest indicator is whether the government is going to shift from stimulating the economy to worrying about inflation fighting. And that could mean a shift in monetary policy. And if that continues to unfold, it sort of nip the recovery in the bud, which could cause some concerns.
All right,
on the good side, the inflation came in by more than expected, but it also is well below the government target still.
Is it though, potentially a key spoiler to the economic picture this year for China?
Well, it's a bit early to say. As I said, we're below the government target, but there are some key factors. Pork prices and vegetable prices is always a key concern in China in terms of worrying about social stability if food prices get too high. The other factor that could be a spoiler is rising property prices that could lead to a property bubble, and that's starting to worry people as well. So as we have this sort of economic recovery or glowing data showing that's where we're headed, If these get out of control, it could be a spoiler in 2013. So this number did cause a few ripples in the water today.
All right, Tara, thanks very much indeed. Here in London, the city's latest landmark, the Shard, will soon offer the paying public breathtaking views over the capital. A viewing platform opens February 1st with tickets costing £25 to £30. Here's a sneak peek in a second of the experience, there you go, of looking down on London from 244 metres, twice as high as any other viewing point in the city. On a clear day, you can see 40 miles and see landmarks such as St Paul's Cathedral, the City of London, Tower Bridge, BT Tower and the Tower of London. London, though, of course, not known for its good weather and great visibility. So best of luck with that. That is it for now. I'll leave you with our pick of the day, the signature that could one day appear on US dollar bills. Treasury Secretary nominee Jack Lew's doodle-like signature has not only caught the attention of the media, but the president as well, Barack Obama, joking that his nominee should change it before it appears on notes and risks devaluing the currency. I'm Axel Threlfall. This is Reuters.